We're here to run through the gamut of commodities with Phil Streible of Blue Line Futures. Phil, welcome back to the show. We missed you.
Yeah. Thanks for having me, David.
Gold has had a nice run. Let's talk about gold first, and then we'll talk about the other metals and the other commodities. So 1861.7, 62-ish is where we're at today as we speak. Again, nice run for the last 3 months. It's at a multi-month high. Let's run through what happened in the last couple of months and whether or not those drivers have found their place, so to speak, and will continue to stay for the time being.
Okay. I mean, if you want to run down on gold, really it was under the funds were in the money managers were in the banks. They were all active sellers on gold. They were playing the rising yield curve. They were also playing the reflation trade. Stock market was continuing to move higher. We saw economic data really come out, and it was much better than expected. And that was really the true headwind for gold. And then as we started working our way up, once you saw China start to slow down, they went into like a stagflation environment. That's when copper had peaked. It had started to come down from here. The Fed started talking about implementing tapering, starting to tighten up. You look at a lot of the other foreign central banks, they're not in a position to do that whatsoever. They're still being very accommodative. So you start to see the dollar index come up. You also start to see gold start to get some legs below it. We moved up. We took out 1800. There was a lot of, once you start getting in the zones of some of these round numbers, it becomes like gravity, pulls it up to 1800. It was very constructive. We held that level for several days. Then it was the big bad CPI report came out. The way we played it with a lot of clients was utilizing options. So we got a lot of leverage. We've been taken to the altar several times on gold where it gets up to that critical level and then it walks away from us. So we wanted to have some limited downside. We didn't want to see a $30, $40 downside day. Bought a lot of call spreads, January, February, April on gold. Gold shoots up, blasts off. We took off a lot on the implied volatility premium. So as it stands today, with the retail sales number coming out, retail sales has not been very friendly to gold whatsoever because it really shows a robust economy, which leads to more interest rate chatter, but a lot of that's already baked in the cake.
All right, Phil, yeah, you're right. Interest rate expectations are on the upside. We're moving up towards the upside. But what about inflation expectations? We've had the highest inflation CPI print since 1990. And so real interest rates potentially could go down if inflation outpaces interest rates, nominal rates, that is, right? Is that possible?
Yeah, we could continue to see those real interest rates continue to grind lower. That would be extremely supportive for gold. It could start getting, gold futures back up over 1900. We did see some of the banks and some of them put out calls for $2,000. Little bit suspicious on some of those calls. I think a lot of times those guys are just trying to grab headlines by having that. So what is going to end up happening right now is that the growth curve is we've already had kind of peak growth in a lot of different areas of the economy. So that's starting to slow down month over month. Those numbers are going to come in. The yields are very flat right now. So the stagflation environment is going to do real well for gold coming up into the end of the year. And then as you go out into the first and second quarter of next year, that growth really stalls out. Yields really start to ramp up, and it creates a deflationary environment, as well as the supply chain issues should be resolved. So if you have a lot more products out there, you're going to see the price of products come down. That's going to impact profitability on companies, and prices will go deflationary. Gold acts as a good placeholder in your portfolio in deflationary environments.
Interesting. Okay, so 2 points there. First of all, you think that the inflation or the higher inflation level we've seen is not going to last forever. At some point, we will see deflation. And so the second point I want to bring up is whether or not gold performs well in a deflationary environment, gold and silver.
Well, gold acts as the placeholder, and then in a lot of people's portfolios where they pivot from things like stocks to bonds to looking at things that are very defensive in nature. And then they also do hold quite a bit of gold at that point in time. So some of those input costs, if they start to come down, you'll see the miners should start to perform well with the higher gold prices and lower, like I said, costs and things like wages and fuel costs. And then silver, it's a bit tricky because it depends on what hat it wants to wear. Is it going to ride side by side with gold, or is this the period where we start to see gold outperform silver again? So I think you have to have some exposure to both. Remember, gold is a currency, so you take that exposure up to 10% in your portfolio. Silver is a commodity, and you really don't want to be more than like 4 to 6% because of the volatility.
Okay, yeah, that's interesting. We'll talk about silver in just a minute. So just finish up on gold. Do you think the rally we've seen in the last 3 months is quote unquote transitory? What do you think? This rally that will continue? 1860 is the level that we're at today.
We did probe higher highs, but we are softer on this particular session. Like I said, retail sales has not been friendly for gold on any of the events that have come out that have been in positive territory because it's showing that growth in the economy. So I really think that gold could go either way. We're taking it day by day. We do cover gold every day on a YouTube channel that I do, the Blue Line Metals Edge. So, if something breaks out or if we take out the highs, 1882, I think that gold can make that quick run to 1900. If we do break back below 1851, 1836 key level support, we go below there, the banks are going to come in, the funds will come in, and they will start shorting below that level.
Okay, interesting. They wouldn't buy at that level? They wouldn't see that as a buying opportunity?
No, because they'd start to see those yields go back up, and they know that the way that the metals work is that the volatility increases the implied volatility also on the options as it sells off. So a lot of times, on gold and silver, it's just the way it is. It becomes a panic and everyone runs for the door when it starts to break down. So I don't think you get those diamond hands until you get closer to 1800 or anything below that.
Okay. Let's take a look at silver now. Sim story. Nice run in the last couple of months. Now, we're breaching $25, which is a key psychological level. Biden just signed into law the $1 trillion infrastructure bill yesterday. And with a news headline like that, you'd expect commodities, because you did differentiate gold and silver, with silver being a commodity. You should expect commodities to rally on that news, yet we're, again, like gold, silver is trading softly today. So what's your expectation for silver going into the future?
Critical level on silver, if you pull up a daily chart on it, it's about 24.92. It came up to that level in August, and then it just recently came up to that level back last month as well. So that is going to be your key level support. Copper, I think, is weighing on the price of silver right now. The problem with the infrastructure bill is that, it started off, it was like, $3.5 trillion, and then now we've winded it all the way down. So I think a lot of these higher prices were baked in. Now they're starting to come out. The devil will be in the details with it. Silver does have a nice trend line going up from those lows. We got to like 21.90 on the downside. We need to see constructive breakout, though. We need to see it close above 25.50. The next session needs to open up higher. That's the only way it could do it. And what you don't want to see if you're a long option holder is the average true range come in, the volatility aspect of it, because those options are going to lose a lot of premium.
Mm-hmm. All right. Great take. We'll keep a tab on silver as that story progresses. Let's take a look at some of these other commodities. Lumber made headlines earlier this year as being something that shot through the roof, and as quickly as it went up, it came down. That is a picture of lumber futures. It's not a Christmas tree. It's lumber. It's the price of lumber. But it looks, that shape. How did you trade that?
Oh, we caught that lumber. We caught that breakout right when after COVID and stuff, when it was, you were on the phone with your buddies and they were saying, "Hey, what are you doing?" "Well, I'm going to Home Depot. I'm going to build a bar in my basement." And then you call your other buddy and he's building a deck on his backyard. And then you had the border closed with Canada. The sawmills were doing social distancing, so there was no supply, and the truckers were all laid off. So it was a perfect storm for that. We do cover, to be fully transparent, we cover the lumber market in the breakfast report. That's a report that I write every day. We caught the breakout on that. A lot of people made close to six figures on lumber, and then that breakdown. it actually took a short position. Some people were looking at the breakout today back on the upside of lumber. We're going to keep close tabs on it and see how that plays out.
Okay, but generally speaking, the fundamentals, are they supportive for lumber? Are you seeing a lot more of your buddies going to Home Depot and buying lumber and stuff, building decks and whatnot?
No, I think that there's a strong correlation between the ability for it to flow back through the U.S. So again, it's supply chain bottleneck thing that'll be resolved, and then also rising interest rates do tend to curb some construction, and I think the supply is back online. So I think it's more of a trading affair. I did see we got up to we were close to limit up here today. We had a breakout yesterday, so it looks really good. I could tell you two commodities that we're watching that with the supply chain being resolved, we think that back to metals, we think that platinum will be one of the biggest benefactors from it, because you have car prices at record highs, used car prices at record highs. Assembly plants are completely offline. They start getting those chips. The first thing they're going to do is they're going to flood the market with new cars to take advantage of those high prices. And in order to do that, they've got to buy a lot of platinum. So we like platinum to the upside. That probed a new recent contract high today. Another market similar story is cocoa. Hershey came out. They said their profitability could have been better. Their earnings could have been better had they been able to get their hands on cocoa, and they couldn't due to a supply chain issue. So they resolved those. Those are two supply chain being resolved plays for people.
Yeah, I read that coffee recently hit a 7-year high. Is that due to supply chain issues as well?
That would be from Vietnam. They could not get coffee into the United States.
Yeah.
And then also down in Brazil, they had a freeze back in July that severely damaged those trays. They had to take them out, replant new ones. It will take 2 to 3 years. So expect your Starbucks bill to remain at elevated levels for about 2 years.
The internet memes around that was hilarious. It's like, oh, I want to be a millionaire, so I'm saving money not going to Starbucks. But now coffee at home is at 7-year highs anyway, so I'm not saving any money. But yeah, okay. Let's talk about oil. Crude oil is a big component of the CPI. Well, if you take a look at headline CPI, not core CPI. And actually, if you break it down, last week when the CPI numbers came out, you'll see that the gasoline component of energy went up 50% year on year. Now, I know you're bullish on oil, but I mean, 50% rise. Is that going to continue?
You are seeing some OPEC, some of the members, they are pumping out more oil. There is this underlying, narrative that Biden is going to release from the Strategic Petroleum Reserve. That's already at multi-year lows. I can't see us doing that, but anything's possible in this day and age. We've been buying corrections below $80, selling them back out $2, $3, $4 higher. The exchange has done a great job by creating multiple size contracts, 1,000, 500 barrel, and 100 barrel contracts. So there is something for everybody to trade. Back on those energy costs, everyone's talking about natural gas. That's back on an upswing right now. And then the big component into fertilizer costs, which are up 180% year over year, is that natural gas part. That's going to cause a battle for acres between corn, soybeans, and wheat into next year. So corn is the one that could have the biggest shift out of acres, and you could see other products like beans benefit from it.
Okay. Now, one thing that we don't talk about, you and I, very often, but you do trade, is Bitcoin and Ethereum futures. So with the recent run-up, let's talk about that. Huge run-up in Bitcoin and Ethereum. It dropped overnight, though. I'm not sure what happened last night, but a huge drop overnight across the board. Have you been following that?
Yeah, the sell-off came back down to our support level right around 60,000, either side of it. We did recommend some clients to pick up. They have a micro Bitcoin, which is 1/10 of a Bitcoin. We usually put them on in, 2, 4, 6 of them at a time. That way you are able to generate some alpha if the market trends back higher. I think that VanEck not having the ETF, that was a big blow last week. And I think it deflated some of Bitcoin. Bitcoin, though, does well in the reflation trade as you see yields go up. My partner, Bill Baruch, sent over a chart this morning on 10-year yields versus Bitcoin. and it does really well. It doesn't do as well when you start to get that stagflation, deflation, where, well, mostly the deflation play. So I think that was the big blow. So you saw dollar index going up, gold going up, Bitcoin lower. That's like a total deflation. It's painting the picture for deflation, but that's only a few variables. You need to have, 15, 20 variables in there in order to really see are we having a shift in the economy or not. So I think it was just short-lived, the sell-off. I think that will come back up. We'll see 65 to 68,000 again and be back in the range.
Okay, that's interesting. That's the first time I've heard from you, at least, that Bitcoin is a reflation trade. So there are macro factors. From guessing from what you're saying, there are macro factors that do affect the price of Bitcoin. Would you consider a Bitcoin, let's say, leverage play on the S&P 500, for example? Is it just a riskier risk asset?
It is definitely a risk. It shouldn't be. You should not have more than, like, again, 4 to 6%. It's not a currency. It's not. You can use it to buy things and stuff. So people argue that it's a currency, but it doesn't trade like a currency because, if you look at Bitcoin it's down 5%, like right now. If the US dollar fell 5% or, the euro currency or British pound, that's going to, like, wage war. There will be changes in, the political scope, like in hours after that. So you just don't get, 5, 10, 20% moves on currencies like the dollar, the euro, and pound and things. So I really believe that it's more of a commodity than anything. It's a correlation towards energy and also yields. But it does work well, like I said, in the reflation trade. It has been a good inflation hedge.
Correlation with energy, a positive correlation, you mean?
Yes, positive correlation. You could overlap a lot of these charts just to make it simple without it running anything too complex whatsoever. You could see the relations.
Okay, interesting. So do you have a long-term sort of crypto view based on your macro view?
Not necessarily, because it's still a very new product. So when we run back tests and things, there are a lot of gaps in it, and it's hard to, if you start back testing like U.S. equities, but you only look at 2 years worth of data, well, which way has it been? It's been a 45-degree angle straight up.
Sure.
Bitcoin, same thing. Now, remember when Bitcoin was at like 20,000, you get COVID, Bitcoin goes down to like, I think $3,000, and then it started its rally from there. Well, that sell-off, we flipped to deflation on everything. You saw the big move and the dollar went higher, yields went straight down, gold went higher. Initially, these are all like deflationary things, and Bitcoin didn't do well at all. So, if you start back testing it over different sections, you could really, bring your trading skills and your knowledge of things and really bring it up to like the next level.
All right. Phil, excellent thoughts as always. Great analysis. I appreciate you coming on the show today. Thank you.
Yeah, thanks for having me.
Thank you for watching Kitco News. And don't forget to stay tuned tomorrow, Wednesday at 3 p.m. Eastern Time to watch the live debate with Alex Mashinsky and Peter Schiff, hosted by Michelle McCory. Questions will be submitted live.